Greetings and welcome to long-awaited episode number 5 of Trading After Dark. This is Don Miller. It has been a while since I've gotten one of these up here, so I apologize for that and I appreciate your patience. I'm going to jump right into today. I'm going to use a couple of sequences from today's trading, Friday, August 5th, 2011. This is in the midst of a rather volatile market. We had jobs data come out early on, and I'm going to talk about a lot of what's going on here as the market action unfolds. You see, based on the P&L on the lower left, I've already been doing some trading in the morning. I was trading Globex, and I was trading the jobs report a little bit. Obviously, the market was a short off the open on the gift gap into higher time frame resistance. And what I'm doing right here, as you see, is I'm providing some liquidity as the market's getting oversold. I waited very patiently until the market got down to ridiculously oversold levels. You can tell that based on the what we call air on the higher time frame charts. Prices will not go to zero, nor do they go to infinity. And part of my business as a wholesaler is to provide liquidity during these times. The vast majority of the times I do well. There will be some times where I'll get hit. But what I'm doing today and what I want to talk about today is managing my risk with size, even going back to the days of the flash crash and other times where the market does the very small probability. The fact is, if you adjust your sizes accordingly, that's in essence how you're managing your trades. And that's what I'm doing here. I mean, I can trade 200 lots, and all I'm doing is I'm trading 20 lots today. In fact, I don't recall today actually going over 20. I think this is the heaviest I was. So I'm just providing some liquidity. You see how quickly the market is moving and basically providing some buying down here. People want to sell at these levels. That's fine. I'll provide liquidity so they can do so. Again, you see a very, very thin market. One of the things I want to do in today's episode is put the entire day in context. So we're going to talk about a couple of these sequences, but I want you to understand the whole context of the day. Now, I'm not concerned here, by the way, about a stop per se. And that's such a huge myth and does so much damage in this industry. I'm managing my risk with size. Okay, so this market can literally run 10 points against me and it's not going to kill me. And so I'm doing that. I'm not concerned, as the market corrects its inefficient scenario, which is what I call a market when it's down here, and as it reacts back into the trading channel, you'll see me start to get out of some of these trades. And so that's in essence what we're doing. This is really the first major sequence today after the U.S. General Session opened for me. Again, I was doing some light trading with Eurex and with the jobs report. But again, what you basically see here is the wholesaling. Okay, I got in as much as 20 to the downside. It's going up. It's correcting itself. I'm not looking for home runs. This is what a professional liquidity providing trader does. Now this is, again, a market which is very different than many markets because it's so thin today. So I've got to adjust my sizes downward, as I said. So again, I'm going to try to put this entire day in context still, try to keep this to under 30 minutes. But again, I'm trying to give you a feel for the desire from a business plan perspective to provide liquidity when the market gets at these levels. Now, what I'm also looking at here on my 1-minute chart is I am expecting, first of all, this air, as I call it. If you look at the 5-minute chart, and especially your higher time frame charts, which you can't see here because it's off to my right, it's not being captured. There's a lot of air. The market is really at the lower end of several channels, and we expect that air to fill. We're not looking for complete market reversals. We're just looking for the inefficiency to get corrected, basically. So in essence, that's what I'm doing here. I'm watching the air on the higher time frame charts, and I'm also watching the 1-minute chart. I'm watching to see whether what I would call a coil develops. In other words, I'm expecting some profit down here because the market has just gotten so stretched, and that's the sequence that you see I'm trading here. But at the same time, frankly, what I'm looking for is some confirmation in this thin market. I'm looking for this 1-minute chart to what I would call coil, and this is something that the jellies are very familiar with. And the idea is if I can be convinced that the bottom is in and I can stop basically getting out or stop performing what I call these probe trades. These are probe trades. These are just very light sizes, and they are without confirmation. Okay? And what I want really is some confirmation. I want the market telling me, okay, it's testing back and forth, and now it's going to fill that air to the upside. and that's going to be the next sequence here. So basically the sequence you see here that I'm taking out, I'm kind of playing with some small lots now. This is a sequence where I call it a probe. There's no confirmation aside from the fact that the market is just simply inefficient. And again, if the market continues to run, I'm managing my risk with size, not a big deal. So again, you'll see a couple of different sequences today. I want to put the whole day in context, though. I have several charts. I have several statistics that I use to manage myself. And today was an opportunity where I actually had some time to trade for myself, which I haven't had a whole lot of lately. And so I'm going to talk you through the whole day again, try to get things in perspective for you. Got one lot left on this. Again, this is intended to, in essence, I'm flat, by the way, but it's intended to get a feel for the market, make a little bit of money by providing liquidity, but more importantly, be there for that opportunity where we got a little bit of a coil and a break to the north. So in essence, I'm flat here. I'm looking to see if we get confirmation, getting a little bit of a double bottom attempt here. Looks like the time is just before 10 o'clock. There was no data coming out. I'm looking at my trade log here. Just after 10 o'clock, you're going to see me getting into more of a position. Again, as far as I'm concerned, I'm flat. You know, if I have 1 to 5 contracts on, you know, it's like I don't have anything on. So, you know, I'm not really staring at the P&L. By the way, I have that P&L covered up when I'm trading. I cannot see that. I do not see that. I have put it up here, and I do record it so that you can put some of this in perspective for the Trading After Dark episodes. But when I'm trading, there's actually post-it notes that cover that. I can't see it. It's irrelevant. You know, we're just looking at making good trading decisions. Okay. So again, I'm watching the market here, starting to put in some lines to try to define where we are finally going to stop. And if I am convinced as such, I will go ahead and start putting some position on for another sequence. Right now, I'm not getting confirmation yet. Still just a probe status. But looks like I'm going to put another probe on. I think this was a situation. I think we took out the stop. I think we took out the overnight stop. I've said this several times, probably hundreds of times in the industry. Look what's happening here. There are so many people who trade or people who tell people how to trade who really don't trade, that have this desire to set stops at the prior swing high or swing low. Well, look what happened here, right? The market took out the stop, and now it's up 6 points. Okay, and if you look back at that entry, what I did is I waited for the stop to get taken out, and then I went back in and I got, I think it was a 10 lot on in addition to the measly one I had on before. Could have been sized heavier, of course, but again, very thin market, got a long day to trade, just trying to get a feel for this. Please don't use prior swing highs or lows as stops. I've said this time and time again. I know there's another Trading After Dark episode, I forget which one it is, but it's one where the employment data comes out, and I've actually got my order in below the low of the day, and the market comes down, if you recall, and it grabs it, you know, blows the stops, grabs it. As soon as those stops are blown, it jerks right back up. And the same thing just happened here. So if you learn nothing else from these episodes, it's just incredibly important not to put stops where the prior swing high or swing low points are. Now, once you have a potential head and shoulders in play where you have a low, a lower low, and then a higher low, you know, that's a little bit different in the inverse on the upside. But please, 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 there are so many people out there with inappropriate books and tapes and seminars and chat rooms that want you managing your trades with stops, and they do so to a large extent because of risk, you know, because of legal risk. Okay, forget the legal risk. You want to be profitable, so you want to manage your risk with size. If you do happen to use one of those points as a stop, you have to be darn ready to get right back in a split second later. Okay, and I can't tell you how many times we've talked about this in the Jelly program. So, again, that second sequence, got my little one lot back on here, was one of those. Okay, stop gets blown, you know, get right back in, and go from there. So now I'm getting a little bit of a confirmation mini confirmation that we've got a low put in. Okay, in fact, we've got a little bit of that inverse head and shoulders here. You can see the left shoulder on the what is it, about 950 or so. It took the stop out, came back up, tried to retest down, couldn't do it. All right. At this point, probably a good idea to, if you are using stops, which I am not in this sequence, but if you are using stops, you can now go ahead and consider that as a point. But again, if it blows and turns right back up, you got to get right back in. All right. So anyway, relatively small lot. Now I'm going to start adding here, I believe, if I remember this. I got my trade log over on my other screen. Okay, put another 5 lot on. I've got some confirmation now. This is not the earlier probe sequence. This is now, okay, we're getting some confirmation. I want to be long down here because I'm expecting the air, I'm expecting the inefficiency to correct itself a hell of a lot more than it already has. So I'm going to try to dance here a little bit. Very, very thin market. Again, managing my risk completely with size. All right. Look at the sizes I'm trading. And another comment I want to make, and I made this throughout the earlier episodes, is that you do not need to be trading mega size to do well in the market. Now, this happens to be a rather volatile day, of course, and it helps in terms of travel range, price range. But you do not, again, I did not trade any more than a 20 lot size today. I was never heavier today than what you just saw. And as you see me go through some of these other sequences, you'll see how ridiculously simple this is in terms of methodology, in terms of going back to that kindergarten slide in my blog and what I presented in New York. What do markets do? They consolidate, they break out, they extend, they overextend, they back and fill, they consolidate, and they repeat the process. All you have to know about the markets, folks. You don't need sophisticated indicators. You don't need a dozen different screens. You don't need chat rooms. This is a very simple business that almost every trader tries to overcomplicate. Oh, it's got to be more difficult than that. Oh, I've got to think about what happened to the jobs and what does that mean? And oh, is this the bottom? And you just react. You get in the flow. You've done this long enough. You just react. So I've got a bottom put in. You can see I'm starting to see a little bit of this coil. This narrowing price range on that 1 minute chart, right? And the idea is that if we start breaking up from here, I want to get a little bit more on. All right, if we get back above 1190, you're going to have some shorts covering. So I'm seeing this little coil break to the north. I put a little bit more on. I believe I've got another trade entry here that gets me even heavier. I think I go back up to, if I recall, 15. Again, within the next couple of minutes. What else is happening here? I'm not too concerned about the 3-line break chart right now. This is the type of trade where you're providing wholesale liquidity to the marketplace. You're certainly going against the immediate trend. Nothing wrong with that at all if you're managing your risk appropriately. No pain, no gain, and there really is no pain. Again, this thing can go down 10 points and I'll be fine. Markets always correct. Always correct. And you just have to be very, very cautious in terms of when you start. Am I early sometimes? Absolutely. Absolutely. And I think you're going to see a sequence this noon or midday, actually, where I am a bit early on that barf, and I had to dance around that a little bit. Again, using size to manage my risk. All right. So what I got? 9 spot on here. Again, coiling on the 1 minute chart. I do want to get another position on here. This thing, it looks like it's trying to break above 1190. I'm watching this. Obviously, I know what happens, but I'm watching this live with you as it's unfolding. But the thought process at that time was to get at least a little bit more on above that. Could I have been heavier than this? Yeah, absolutely. But was not looking to incur excessive risk given the volatility of the marketplace. This was an MATD, by the way, morning after trend day. We're looking to fade the moves. I was actually pretty disciplined on waiting for this thing to come from almost 12.15 down to 11.85. That's what, 30 points. Let it fall 30 points before he started, getting interested in fading it. Okay, adding a little bit more. We're breaking up above 90. Right, I'm expecting this to get up to 93, 94, 95. So there's the 15 lot I got on. Market's moving so very quickly. It's a little bit of what I call a greased pig market. And so I'm not going to go crazy here. All right. So what do we have now here? A market correcting itself, moving up nicely. You see the average price, which really is irrelevant. You should never manage your trades based on where your average price is. Average price is just a function of where you got in. If you got in early, then it's not going to mean anything. Okay, it really doesn't mean anything. What means something is the market a buy or a sell. Okay, market doesn't care what your position is. You might have been early, but might have been late. All I know is I want to be selling any existing longs into this move. Okay, let the wholesale, the oversold inefficiency correct itself, close out the wholesale sequences, and so I closed out some of that. You see I've got orders above the market. Now this is not a buy at 1188 and hold until you get to 1225. All right, this is professional trading. You're taking the sure, high probability, non-gambling profit. Okay, this business is not gambling for the people that really understand it. All right. And I still have people, by the way, I still have people asking me whether these are simulations. No, this is real. Okay? This is real. This is not a simulator. I've never used a simulator in my entire life. And I've been doing this for over a decade. Got a couple of contracts left. For my all intents and purposes, this trade is closed out. You'll see me dumping the rest out here shortly. And anyway, again, not a bad sequence, fairly effectively managed. Not going for a home run. Got my one lot back here, and you'll see that taken off. Again, P&L not relevant at all, but I again want to stress the fact that this is as much about trading with modest sizes as it is with mega sizes. You know, adjust your sizes accordingly. Are there times when I may be trading very, very heavy in a thin market? Yes. Just didn't feel like doing it today. Actually, I was up pretty early, didn't get much sleep, and so I've got all these factors I've got to take into consideration. So I'm going to go ahead and close the rest of this out as it pops up. Again, I'm not doing all or none. I'm scaling in, scaling out, and you see I got out of that last sequence. So we're going to take it from here and go to a midday sequence, and then we'll look at some stats, and we'll go from there. Hope it helps. Back in a sec. Okay, here we are back again, and it is just before noontime on the same day. And what you're going to see is a couple of things. You're going to see basically me being very early and inappropriately early, although looking back at it, I really can't argue a whole lot with it. But there's a few things I'd do differently. But you're going to see basically one of my favorite trades, and this is a sequence where I'm looking to provide liquidity during the midday extension. You've got a few things going on here. You've got fund managers who missed the morning boat who need to get their orders in, maybe in a little bit of a panic mode. You've got retailers who've also missed the morning move and are either trying to get aligned with the existing direction very, very late, or they are on the wrong side of the market and they finally give it up. And you just have a situation where this move is typically not sustainable. Even during the days where it's been very, very violent, flash crash, for example, May 6th, the midday noon fade was very, very profitable. It's just a good time of day to do that. But what you're going to see here is you're going to see me be stinking early. And a couple of things I was a bit impatient on. And one of the things was not waiting for absolute capitulation. We've got a market which was down. Dow was down 500 points the day before. It's down, as you can see here, 140. And everybody's trying to pick a bottom and a final bottom. And again, you look at the earlier sequence, that's not what we're doing. We're looking for inefficiencies. Look what the market did, by the way, after that sequence played out. Did I get the absolute top at 1200 to bail? No. But I'm out of that trade, and I'm now going after a separate sequence. All right. I'm not holding from those earlier positions. You know, some of those folks are probably barfing it out here. So, but what you're going to see is you know, okay, I'm thinking, you know, I'm thinking this is good. You know, we've taken out the prior swing low. We're starting to hold basically here, and so I'm feeling pretty good about it. But I'm not waiting for that final in the context of what's going on for the past couple of days. I'm not looking for that final barf move, and also there's not enough air on my 5-minute channel. Got a lot of air in my 15-minute, a lot of air in my 30, 16, 120, but I don't have enough air on the 5, and I really like air in the 5 because I like to exit these trades on the reaction back up the 5-minute boundary channel. and right now that's up around 86 or so. So I get a little bit of air there, but in the context of the volatility here, not so much. All right, and I really need more. So again, you see me managing my risk with size. I had more on. I took a little bit off at 575. Just lighten my load. When in doubt, get smaller, right? And this is a sequence where I'd like to get back up to that 20 lot, and as I look at my log here as I narrate to this, I guess I do get up to 20 at some point on this. I thought that morning sequence was the only time I did it. So I've got two sequences actually that I went up to 20 on, and basically waiting for the right time to do that. But I want you to see, being fair and balanced here. I want you basically seeing me being early and how I'm managing that. Okay, I got in a little bit more at 4. I'm going to try to take some off on the way up. Thinking that there might be more of a drop here, right? And so that's how I'm going to manage this a little bit. It's not an all or nothing business. I remember this. I remember this tremendously as I'm watching the replay, because I was thinking that 475 would get taken out so easily just to lighten my load a little bit. And it wasn't getting taken out, and I was starting to wonder what the heck was going on. But I thought that again this might be the bottom, but I misgauged the extent of the move, and that happens. This is a market which is imperfect. You're imperfect. It's imperfect. You've got so many market participants that it's you just got to get used to that. That's why I think a lot of computer programmers, I know. Computer programmers and engineers have trouble in this business. Finally get taken out there, lighten my load a little bit, because they're looking for perfection. If you're looking for perfection, a skill set that is a requirement in some industries, engineering. If you don't build buildings, to perfection, you've got lives at stake. Accounting, you got debits have to equal credits. Computer programmers, you can release 900 betas, I guess, but there's a right and a wrong, and in this business, you just got to cut yourself some slack. So this is a business complete with imperfection, and I want you to see that as we're managing here. And I'm going to stop it here, and in the interest of time, I'll bring it back when the market's a little bit lower here. Okay, here we are, and still got a 5 spot on, and the market has started its descent. A little bit of an air pocket here. Again, I've got a 5 lot, doesn't bother me. Don't look at the P&L, don't look at the numbers. I'm managing my risk with size. If you get so caught up in stops, this business is just going to aggravate you to death. Okay? You could look at this, I suppose, and say, well, the market's down, maybe 10 points from where your 5 lot was on. But, I'm managing my risk with size. It does not matter to me. Okay, it's the same thing as having, 100 lot on and giving it a half a point or whatever that number comes out to be. So I know that this is still a good, inefficient point. There's profit potential in this move for a wholesaler. You just have to stay rational, and again, I'm sure some of you may be viewing this thinking, well, he's crazy because he just let this thing run 10, 12 points against him or whatever that was, and no, I'm managing my risk with size. I've said it over and over again today. I'll preach it until the cows come home. Got in a little bit more inefficient spot, taking it off as it gets up. You can kind of see what my average price is. It's fairly relevant. If it starts going my direction like it did before, and I had some coils I could bank on, then sure, I'd like to be averaging up. I'd like to be getting in and getting incremental profit when the P&L is in my favor. But again, the P&L and the average price is irrelevant in terms of trading. The fact is that I'm managing a market. I'm trading a market which is inefficient. It is oversold. It is shown over the past several days. It has what I call a tail mentality, where there really is often no confirmation. It just tails out, and if you want that wholesale spot, you got to get it while it's there, because it may be gone in a heartbeat. And if you go look back at the charts the last couple of days, you'll see that happened over and over and over and over again in this market. So if you got to catch that tail, you've got to be willing to take the risk, and you've got to be smart about it and manage your risk with size and all that kind of stuff. So So anyway, what I got? I got the 15 lot here, and I think I guess I had 20 on before, so I'm back down to 15. And I'm just going to basically trade this size out. I recognize I was a little bit early. I could have loaded the boat down here in the low 60s. Chose not to. Again, I'm not looking for perfection. I'm not looking for home runs. And as this thing, corrects its inefficiency as it gets back up, my target would really be that 5-minute upper end of the 5-minute channel. Then I'll get out of that position. All right. So again, I want to show you things where I'm wrong, if you will, even though there's no such thing in this business. I'm early, how I'm managing it. That's what's important. This business of you get in here and here's your stop. It just that isn't how you do this, and it's unfortunate that so many people are doing this industry a great disservice by having mandatory stops, mandatory 1 point, 2 point, 3 point. It doesn't matter. You have to keep adjusting those points based on the market patterns, and also what if you're early? What if you're right? And you read the market right, but you're just a little early. Are you going to use some kind of artificial stop? And Larry Connors has done some great research on this, and he's been published in terms of that whole part of the business that stops are losers. Now, I'm not saying, please, and people who've gone through the Jelly program know this, I'm not saying don't manage risk. Risk management is imperative. But how do you manage your risk? You manage it with a hell of a lot more than stops. Now, if you have a premise-based stop, fine. If the reason that you got in the market no longer exists, like was the case with the Pivot Point briefing of last week and the video that I did last night on the pivotpointadvisors.net site, that's exactly appropriate. Okay, but in terms of, especially if you're going after markets that are extreme, okay, you got to manage your risk with size. Right? And again, Larry has proven this out time and time again statistically. You have to know what you're doing in this business. All right? I guess I go back up to 20. I thought I was at 20 earlier. I guess I'm at 20 now. Yeah, went off to 12 o'clock. Okay. So, and again, took 5 off on the way up. I've got my exit orders up, ahead of me here. And, again, I'm kind of looking for a coil opportunity, although in the noontime fade, often don't get that. And in a market that has a tail tendency, you often don't get that. I'd love to be able to say that I can just look for those. Now I'm watching this 5-minute chart on my right, and I'm trying to hang on to some of this until we get a little bit closer to that channel. And you'll see I bail a little bit early. I probably wasn't patient enough. Again, I wasn't patient enough on the way down. I wasn't maybe patient enough on the way up. Got out a 5 spot here. Again, you may look at that and say, well, geez, that's a 5-point profit on that. Well, that's not relative. It's was the market a buy? Was it inefficient? When is it going to be a sell? When is the high probability of the market going up going to start to diminish? Okay, that's what this business is all about. Okay, so anyway, got a couple lots back on here, and we'll pick this up again in a little bit, and we'll close things out. Okay, we just fast forward this just a smidge, and I wanted to show you one other thing, and that's the adding to the position. Again, going in my direction. I basically have nothing on. You could say I have one on, but to me, again, that's nothing. I'm getting a little bit of that coil finally. Like I said a minute ago, you often don't get that in this market, but I'm getting a little bit of that, so I'm throwing another couple on. I want to make a little bit more on this. I think I get this back up to 11, if I recall, maybe a little bit more, maybe up to 13. And I'm getting, just like that morning sequence, we're looking for that air to fill in the 5-minute. I'm getting some confirmation now it's filling. I'm trying to increase my position. I'm adding incremental profit every time I do this. I'm worsening my average cost, but I'm adding incremental profit. A lot of newer traders don't get that, don't understand. They think they have to improve their average cost all the time, and it's the exact opposite. You want to, in many cases, worsen your average cost so you have incremental profit. Again, the Jelly program talks through that in spades. And anyway, I just wanted to show you, again, the contract sizes aren't that large here. I think Obama was done by this time. But the idea will be to certainly try to create mini outlier trades, even if that's all they are, mini outliers, as you are trading. And, that's really what this business is about. Now, again, what you see, I'm in and out. I'm in and out. I'm not static. I'm not, okay, this is, fixed price and it's in concrete, and if it gets to this point, I'm good. Now, this is intraday futures liquidity providing trading. Okay, this is different than the Pivot Point Advisors situation where we are much longer term and we can watch the market and we can trade a lot less frequently. Okay, this is intraday market moving. Somebody's providing liquidity in this business. I'm a part of that job. Basically, I provide that as part of my business, and that's what this is about. So again, dancing a little bit with this in, out, what is it, 1208. I think I get this up to 13 contracts on this next pop up. I'm going to go ahead. You see I've got 3 sets, so I think I go in here with two sets of 3s. And again, just to get something more in this. Catching these tails is very, very tough to get size on. Very, very tough to get size on. So you're looking for any little confirmation you can get. There's 10. And oh, by the way, what am I doing by adding to positions? I'm getting other people short inappropriately. Okay, they have to take action. They have to cover. We fuel the market, yada, yada, yada. Okay, so there's the 13. And we'll take this thing out as we get up toward, looks like 1174. So I'll start taking this stuff off. I'm getting a little bit of that air fill in the 5. Now, if you look at the market after the fact here, you'll see that the market actually on some Euro news just shot up like a banshee all the way up toward 1190. Okay, I was not holding position by that. I'm just looking for the high probability wholesale trade and not the gambling, hope it goes up 20-point type move. I can always get it back in on the other side. All right, so again, this thing's approaching 1173, 1174. Just getting a little bit extra money with that, those outliers, those extra ads, and let's see, when do I close this out? Looks like just before 12:11, I take the rest of it out. Most of it is out in just about 30 seconds here. So again, I hope that helps you. What I want to show you is some statistics in terms of putting the whole day in perspective, some of the things I look at, some of the tools that I've created for myself, and that's what's important to me. So we'll go ahead and we'll watch this get closed out here, or at least get down to a couple of contracts. In essence, that's flat, and we will pick it up with the statistics. And always adjusting my prices, back down to 2. So I mean, it wasn't a home run morning. It was about 12 grand. And I have to accept that. It could have been heavier, could have traded a little bit better, could have been sized a little bit more appropriately, could have been holding a lot more from the bottom here, a lot more I can do about it. But such is life. You just come back at this business day after day, and actually I'll watch you see this thing closed out here, or let you watch it close out here, which should be, if my log is right, 12:10:57. So again, I could have had more on. The air's finally filling the 5. Certainly not used to trading a volatile market because it has been quite some time since we've had a market like this. So a lot of marginal errors. So let's pick it up. Let's wrap things up, and we'll close things. All right, I want to start with some charts to put the day in perspective for you and give you a feel for some of the things I look at. And essentially what you have here is a graph that I created in Excel that is directly linked to my TT order entry platform. And it's something actually one of the jellies John helped me with at one point. And basically it captures live trading performance on a half-hour incremental basis or a 1-hour incremental basis in the overnight session. And basically this is the results of today. I've left the dollars off, but you'll see that in a little bit anyway. And you see some shaded areas, some peach areas where I want to be a little bit careful. I'm typically not that great overnight, early in the morning. Mid-Europe session, the U.S. day session start, and the U.S. day session afternoon, I tend not to trade much. So I have those shaded areas that tell me to watch those areas. Next chart here is basically the same thing, but in a line graph format. And it shows the cumulative gain for the day, and kind of gives you a feel. Not every day is like this, of course, but just gives you a feel for some of the things that I look at in this business. And you have, again, I started trading today. It was interesting because I got up today, my Comcast internet was actually down, phone, TV, and internet, and I was panicking before the day got going, but everything was up and running, by I think it was 5 a.m. But I couldn't even do anything early on, and I did not trade that early Europe Open, which actually was pretty good today. So again, you kind of see trading. It starts off slow, it tends to pick up, and then it backs off, ebbs and flows in that manner. But don't do a whole lot after 2 o'clock. I kind of have a trailing stop and set in mind that I keep raising over the course of the day if I know what I'm doing. If I'm on my game, you see a little bit of that as we get toward the end of the day. And this final chart is kind of that same hour by hour or 30 minute by 30 minute increment line chart that you just saw on the prior graph, except this is cumulative for the month. So it's essentially by half hour. So, today's August 5th. You see results from August 1 through today. The month is just getting going. You can see the numbers there. It's all relative, folks. Don't get too caught up with the 25,000 number. Just, whether it's 2,000 or 100,000, it's all relative. What I want to get across here is the idea of managing your performance and statistics. So I hope you found this really, really helpful. Extra long version today. Felt like getting this out to you. Any questions, email me, don@donmillereducation.com. Have a great weekend, and we will see you later. Take care.